taking a look at some news over the last week, and we have a whole bunch of crazy stuff that's gone on. So last Wednesday, the day after we went off the air, Janet Yellen, Secretary Yellen, Jellen like Yellen. Do you remember those commercials? It was for the foot. Was that Dr. Scholl's, I think?
Yeah, they were the Jellen. Yeah, I do remember them. I don't remember who it was for.
Jellen like Yellen. So she probably wears Dr. Scholl's, I'd imagine, at her age. But she's the Secretary of the Treasury. She said, you DM me this whenever it happened, Ewok, but she said specifically that there is no reason for investors to feel nervous about the U.S. debt right now. So when you hear that, okay, there's no reason for you to feel nervous about the debt.
You immediately feel nervous.
Yeah, exactly.
Right? So, I mean, yeah, there's when you hear things like that, it's like, okay, we got to worry. Now we have to worry because they want us not to worry. It's always the opposite. It's funny how that works, but when you don't trust these people and what they're saying, it's like, oh no, what's going to happen now?
Well, for traditional investors, they should be worrying because the S&P 500 is at an all-time high for like the second day in a row. And after a comment like that, for people like those people, there's definitely reason to worry. And it also means that they're going to be printing money in the not too distant future, which is one of the main topics of our show tonight. And that's why people should, not financial advice as always, but I think it is advisable for me anyway to get long in crypto now. I mean, this is exactly the kind of thing you want to hear. Like she's already preparing, they're close enough to 2% CPI if that, core inflation, if that's even a real number. They were down at 3.1 in October, November. And this all comes, and we didn't mention this was the day after we got off the air, but this comes after the FOMC held rates again last week. Powell warned that they could hike rates again. I don't believe that for a second. I think, again, I always say it, but I think he just kind of does that, fatherly talk to make people feel, comfortable or, caution people or whatever. I don't think they're going to hike rates again. But it leads me back to the question that we've been talking about, and when they will pivot and when they will print. And at this point, and I'm going to have you bring up an image about S&P drawdowns after a pivot. But at this point, I saw the other day, Bank of America said that they think the Fed will start to cut rates in March and have a total of 4 cuts of 25 points each time next year. So that's a whole basis point, basically, off of where we're at right now, starting in March next year. And, Bank of America, I imagine their ears are to the ground, and there's a reason they say that. I don't know. But did you want to bring up the image that you had, Ewok?
I have it up.
Sweet. Yep. So these are after, and I'll let you take the reins with it in a moment. But these are what happened to the S&P 500, the stock market at large, whenever the Fed did make a pivot over time. This is what we're talking about them doing potentially as early as March next year, maybe not till May, but at least, likely by mid 2024. So what do you think here?
Well, it's pretty obvious. I don't know the time frame. This looks to be anywhere from, I would say, from the pivot to the bottom of the pullback. It looks to be 6-8 months each time. But you have 36% drop, 48% drop, 27, 51, 58, and 35. So you're already looking at an average of roughly 40% pullback each time there has been a pivot. So it's quite interesting, this one, it's huge. And that's for the S&P, and, the Bitcoin market there for a while has been kind of mirroring that sentiment because it's the risk on, risk off, types of investments follow each other. So now this says 2023. We obviously think it'll be in 24. It's not going to happen this year as far as a pivot goes. But beware that 6 months later, we could see a nasty pullback, and that kind of coincides with after the halvening, right? Now, if they do it in March and things decide to take off, well, a little pullback may be healthy. So it could be decent timing where if it does rip right after the halvening, give it 6 months for a little healthy pullback, could be good for the markets to kind of self-correct, and realign and then take off again. So, but just beware that this is the history, and obviously, we say it all the time. It's the same until it isn't, right?
Right.
So you kind of have to expect it. Now, you said earlier that they're talking March for their first
The
reduction.
Bank of America speculated that they think the Fed will start cutting in March. Yeah,
Okay.
yeah.
Interesting. We speculated what, May or June, all
Mhm.
along till things happen. But if they're in a hurry to get those money printers going burr again,
Right.
then it happens a little bit earlier. If these wars, I heard a rumor today that basically the war in Ukraine has been pretty much done. Um, and they're just trying to get another round of funding in. So we'll see what
Really?
happens there.
I can't
Yeah.
imagine them asking us for they're asking the United States for money?
Yeah, go figure. I can't believe
Wow.
it.
Huh.
But
I
anyway,
haven't heard that one before.
but yeah, this is so, even if it's March, and then you go 6 months after that, you're looking into September, October, until there's the pullback or correction from the pivot itself. So just
Yeah.
something to keep in mind. It's an very interesting chart, which is still, overall still up and to the right. As with
Oh, yeah.
all the charts kind of go that way if you pull back far enough. Um, but still, it's something to take into consideration.
It's really interesting to see what the max drawdowns are. I mean, that for the stock market is like colossal, especially now 2007. Obviously, there's other circumstances going on right around that time. So that
Right,
might be
right.
why we see the bigger drop there. But yeah, I mean, you're looking at a 30+% drop off at some point, probably for the stock market, which makes a lot of sense. I mean, again, we're at all-time highs right now for the stock market. So
Yeah,
I'm sure we'll probably see that after the pivot does come. And then for crypto, we'll have to see. I mean, yeah, I think we're definitely going to have a pullback. I don't know if it'll be to those kind of proportions, although that wouldn't really be that strange of a thing for Bitcoin anyway.
right.
And it depends on where we're at that point. That's leading into the halving. March would be a very interesting time for them to pivot because, as you said, Ewok, like what, a month before the halving, basically, I think we'll already that might be around time where we're starting to gear up again and the market's going back up before a sell-off by the halving.
Yeah,
Yeah, that could coincide. Either way, I mean, March, May, whatever. I think that's right around the time we will see the pivot happen. And not long after that is when we're going to see the money printing. I mean, like Janet Yellen saying that again, if you guys missed it or if anybody just joined, but her saying last week, there's no reason for investors to feel nervous about the U.S. debt. I mean, what are you talking about here? So you want everybody buying in now and it's going to dump later. I mean, that's just the way it's going to go. So,
yep.